Got a good question for you, Shawn, just as we
Okay.
take up the final couple minutes here. In your experience on these types of business divorce cases, what do you think is the biggest Daubert risk involved to the expert?
Yeah, the biggest dollar risk is really is the projections, the future. When you're doing evaluation of a business with a limited track record, that's always going to be the area that has the most dollar risk. And so that's why it's really important that you can tie in the historical performance of the company with the future performance. And so when you have high growth companies and early stage companies, that's probably the highest dollar risk, just because there's just a lot of things that have to be done to evaluate the future cash flows of the company. And because trying to value the future cash flows of the company based on what's going on, there's just a lot more risk associated with those early stage company, high growth companies.
Do you see much Daubert risk with the discount rate that's selected?
Probably less so with the discount rates, because in general you're going to use a higher, for an early stage company, you'd use what they call an earlier stage discount rate. And so you're not going to use like the traditional build up method like that we use, where we based on the Kroll cost of capital center information and make adjustments for the subject company. I mean, so for the early stage companies, depending on whether or not it's in revenue or not revenue stage, there are statistics out there that valuation experts use for those early stage companies.